Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Nathan Hager, joined by Bloomberg's Kriti Gupta on a morning with a lot of stocks once again moving off the back of earnings. We got big tech, we got big oil. Where do you want to start, Kriti? Good morning.
Good morning. We got to talk about big tech here because it's just so fun to talk about. I think that's my hot take on that. We got to start with Apple. This is the big one. AAPL, surprising to the upside. And I was saying this earlier, Nathan. I think it's all about the expectations. Apple went in with some pretty low expectations. Amazon went in with some pretty high expectations, and they got the opposite results, to the point that Apple has really impressed the market. A lot of the strength on people buying iPhones ahead of the tariff purchases, although Tim Cook saying that's less than 10% of the revenue generated there for the actual physical product. They're also talking about doing pretty well in China when it comes to those Chinese sales. Remember, just this week, they shut down one of their retail stores there. So there was a lot of concern going in about what their Asian impact really looked like. And turns out, pretty good. AAPL, those shares higher by 1.4%, trading at $210 a share. So some positive news there baked into Apple shares this morning. Let's talk about Amazon as well, because as I mentioned, there were some pretty lofty expectations. Microsoft did no favors for them in terms of setting the bar fairly high when it came to that cloud revenue. Amazon, disappointing. Look, their revenue still came in slightly better than expected, but their operating income, their operating profit was lower than what Wall Street was expecting. And on top of that, some of their AI investments, some of their growth trajectory didn't really impress the markets. But again, grain of salt, wagon of salt, if you will, which is simply this idea that Amazon, Microsoft, your big tech names, you have to go into these earnings results expecting an A++ kind of result. And if you don't improve on that, you do get punished by the markets. And that's what Amazon is seeing this morning. AMZN down about 8%, trading at $215 a share. So that is your big tech story. Let's go from big tech to big oil we can. ExxonMobil very much getting a boost as well. XOM is your ticker, trading at $113 a share, higher by 1.4%. Former Dow component, as I was reminded this morning. They beat on their earnings estimates in a fairly big way. Now look, you have seen pressure on some of these oil prices, so there was an expectation going into this that perhaps that would kind of surprise to the downside and weigh on not just Exxon, but its peer Chevron as well. You're seeing the opposite. The volume, their output was higher, so net, they actually did better. They're also maintaining their share buybacks at about $20 billion a year, and that seems to be the magic word when it comes to Exxon shares. So XOM is your ticker there, Nathan. I'll end it on with Chevron. CVX is the one we've got our eye on, higher by 0.5%, trading at $152 a share for the oil giant. A similar story there. The adjusted EPS coming in kind of bang in line. Their guidance assuming oil remains around $70 a barrel. We will see if that continues.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.